business is a numbers game. And if you play the game the right way, you will win. So today, I'm going to give you an income strategy to win at business. Welcome back, welcome back, welcome back to another episode. I'm so excited today because I have my vibe board. So y'all know I'm about to really teach, right? Okay, first and foremost, as a CEO, you must first understand that your business solves problems for profit. I say this all the time. The second thing you must understand is that as a CEO, you are fiscally responsible for generating a profit in business no matter what. Now, you must measure and improve key performing indicators and metrics to eliminate all of your money problems so that you can say yes to profits. Now, as you generate a profit, you will also increase your cash flow. They work together. If you generate a loss, you will decrease your cash flow. Honestly, it's just that simple. Now, there are other metrics that contribute to this, right? But for today, I want to focus on the income statement. And I want to provide you with a simple baby step that you can implement right now to change your numbers, right? To improve your numbers, which will ultimately position you to smile, yes, when you log into your bank account. Now, first, if you are not profitable at this time, the very first thing that you have to understand is that you have internal financial management problems, all right? And you can't just think, oh, OPM, other people's money, is going to solve the problem for you. I said internal financial management problems. So that means you must fix your internal financial management problems first. Now let's talk about that before we get into the strategy. So some internal financial management problems are: number one, your services and products are not priced for profit. This is such a huge problem because if you're not generating a profit with every single sale, then you can actually, unfortunately, position your business to suffer financially, okay? So that's number one. Let me make this big. The second internal financial management problem is that more than likely you do not have the correct revenue streams. Are you clear on your target market? Now, I like to call your target market your profitable client or your profitable ideal client. It's so important to get crystal clear on your profitable ideal client because when you sell the right service or product to them, that will ensure that you're profitable, and then you can provide the most value to them because you're familiar with them, you know all about them, you know what problems your services and products solve because they're your profitable ideal client. So you've done the research, you've done the work to make sure that your prices are priced for profit and you're targeting your profitable ideal client, okay? All right. The second financial internal problem is you're not diversifying your revenue streams. A lot of times, you're not even offering the right revenue streams to your profitable client. And so they may spend with you more, but if you're not even clear on the revenue streams that will work for them based on what you provide, then you're actually hindering your ability to make more money, okay? Moving on. So the fourth thing is that your expenses are too high. I want you to no longer try to keep up with the Joneses because the Joneses is going to keep you broke. Keep up with yourself and operate on a lean, very lean budget for your company, okay? So that leads to number 5. And number 5 is that you lack an accurate financial management system. financial management system is not in order, it's not accurate, it's not reliable, it's not timely, and therefore it is not providing you with the financial insight and oversight and visibility that you need to make these type of decisions become the correct decisions for your business. And so your financial management system is honestly the foundation of your business. And if your foundation is not solid, if it's not strong, you're operating on a shaky financial foundation. So even the strategy that I'm about to give you, it will not work as great as it could because your foundation is cracks in it. It's rocky. It's not solid. Okay. And so if you have any of these internal problems, I want you to fix them immediately. There are more. There are many, many more. Like your debt. You're relying too much on debt, right? You don't have a cash flow forecast for your business. There are so many more. But these will get you started for now, all right? Your goal as a CEO, hear me crystal clear, okay, is to position your business to say yes to profits, okay? Now, this is not just a play on words. It is your fiscal responsibility to, one, eliminate money problems, to two, make sure that you are profitable, and to three, build wealth. That's a B, y'all. That's a B. Make sure that you build wealth because of the success of your business, okay? That is your responsibility. To position your business to say yes to profits, I need you to focus on what I call is your financial house in order, meaning you have the ultimate financial visibility into every dollar that is entering and leaving your business. And so you have financial clarity, control, and you're operating from a place of financial confidence. If you're unable to say yes to this, you need financial strategies, systems, support, and solutions. And the only way to get that is to hire a virtual CFO. Well, I want to introduce you to my company, Say Yes to Profits. We will help you manage and master your finances so that you eliminate all cash flow problems, gain the ultimate financial visibility, and say yes to profits. Listen, I want you to click below and schedule your discovery session with me today. There's a reason why we have a 95% success track record. Click below and schedule your discovery session with me today. I look forward to speaking with you soon. Say yes to profits. Your profit margin, all right? Your profit metrics, sorry. And there are 3 profit metrics that are so important to the success of your company. Number 1, you have your revenue. Now this one, most business owners focus on a lot. Everybody think about earning more money, earning more money, earning more money. But listen here clearly. That is the top part. That is the first step. That's not the bottom step. That's not going to get you to a point where you're profitable. That's not going to get you to a point where you're building wealth, okay? This is just the starting line of everything, all right? But when you do focus on your revenue, you have to focus on some things I mentioned earlier. Your streams and your pricing, okay? When you think about your revenue, you also need to focus on your product or your service, right? So when you want to earn a certain amount of money, how are you going to earn it? What are you going to price it for? What will be your product? And I'm also going to add, like I said earlier, your target. Because everybody can't afford everything, but that doesn't mean you have to be the cheap person on the block, or you have to charge less. You just have to make sure you're targeting the right people that can afford what you want to bring to the table, okay? The second profit metric I need you to focus on is your COGS. Now, your COGS are your cost of goods and services sold. This includes your direct costs. Your direct costs are the out-of-pocket costs that you have to provide that service or that product to your client, right? And so some of your direct costs will be labor, will be supplies, as well as materials, okay? And so you want to pay attention to this, because if you're spending too much on your COGS, that will reduce the amount that can go to your gross profit. That will reduce the amount that can go to your net profit. So it's so super important that you pay close attention to your COGS. The next profit metric is your expenses. Now, your expenses are your everyday operating expenses, okay? And so these are the expenses that you're going to have whether you have one client or 1,000 clients. And most times they don't change. Most times they're fixed. Now, some of your everyday operating expenses can be variable, but you just want to be clear on if they're fixed and they're variable. Because again, most times your expenses will be there, your everyday operating expenses, whether you have one client or 1,000 clients. All right, let's be clear on that. So these are the three metrics that I need you to focus on. These are the three metrics that we're going to work on in this income strategy that we're going to discuss, okay? If you don't monitor, if you don't measure, and if you don't improve these three metrics, you will always have cash flow problems. You will always, unfortunately, struggle to say yes to profits and build wealth in your business. Get this very clearly before we go to the actual income strategy. If you have any questions about this, leave your questions and comments in the comments area so that I can address them, okay? I want to make sure that you're clear on this part. Now that we have a clear understanding of the basic and a clear understanding of three key profit metrics, we're not going to use those metrics to make a simple baby step improvement that can actually result in doubling, possibly even tripling your cash flow as well as your profit. And so what I want to do now is create an income statement using the three metrics that we just talked about. So let's say, for an example, you are a company and for the year you earned in revenue $400,000. You earned this for the year. And let's say for that same year, your COGS equaled $200,000, right? That means your gross profit will be for the year $200,000, 50%. Not bad, but that's your gross profit. Now we have to factor in your net profit and your everyday operating expenses. One of those three metrics, right? So let's say for your operating expenses for the year, they actually came to $150,000, right? So that means your net profit for this year will be $50,000. A simple income statement. And now the baby step. So let's say for the baby step, we're going to focus on something real small, right? A real small change, not a lot of stress. Everybody and their mama can do it and you can do it too, okay? So let's say the simple change is that we want to change these numbers by 3%. I said baby step, right? So all of these numbers are going to be affected by just 3%, okay? Now, I want you to see how just a simple baby step can result in something amazing. Okay, so when we change this by 3%, that means that your revenue is going to increase by 3%. So now your revenue is actually going to be $412,000 for the year. Okay, that's an increase. Now we're going to say that your COGS, we want them to decrease by just 3%. That's going to give you $194,000 for the year. All right? Stay with me now. That means your gross profit margin or your gross profit is going to now be $218,000 for the year. Okay? So we increase your revenue by 3%. We decrease your COGS by 3%. That left with a gross profit increase by 3% of 218,000, going from 200,000 to 218,000 with a simple change. Now, let's factor in your everyday operating expenses. So, let's say for your everyday operating expenses, we're going to also decrease them by 3%. So that's going to take your expenses to 145,000 for the year. Stay with me now. Now, once we decrease these, take your gross profit from your expenses, that is now going to give you a net profit of $73,000. Okay? Now, let's pull this all together. We made a simple change of taking 3% over those three profit margins: your revenue, your COGS, and your expenses, right? We only focused on those. By focusing on those, we went from 50,000 one year to 73,000 the next year, which means your overall profit increased by what? $23,000 by a simple change. Just imagine if you do 5, 10, 50, 70%, right? And you focus on the three profit metrics, the change that you can see from 1 year to the next, or 1 month to the next, or 1 quarter to the next, by implementing simple baby steps. You see, it doesn't take rocket science to build a truly profitable, successful company. It takes strategic financial planning, strategic financial management, and guidance to make things like this a reality. So what could you do with your percentage? Are you going to focus on 3%, 5, 10, 15, 20%, 50%, 70%? What percentage are you going to focus on for the three metrics here so that you change the financial trajectory of your business? This could be an increase in your bank balance. Now, there are other things that we have to factor in place, but if we're just talking about your income statement and changing it from one period to the next, you can now have an extra $23,000 in your bank account by making a simple 3% change. So I hope this has been helpful to you. There are several income strategies that I'm going to continue to give you. So make sure that you subscribe. Make sure that you tune in every single week so that you can start to make baby step changes that will result in you being able to scream, say yes to profits, okay? If you have any questions or comments, definitely leave those below. Make sure that you subscribe, and do me a favor. Rate this video, rate this episode, rate this podcast. Let us know what you think, because if you rate it and you give us a good rating and a great review, this will go out to the masses, and we will be able to achieve our mission of helping businesses, thousands of businesses, say yes to profits. This is Octavia Conner. Thank you for tuning in to another episode. Until next time, say yes to profits. Toodoo!